Okay, we already did one sound check, but let's just make sure that it works for everybody. Can you hear me? And can you also see my first slide? Okay, great. And I am recording this, so, in case you don't get something, you'll always be able to go back to it later on. And what we're going to do is we're going to start with some of the very basic stuff, but then it's going to get a little bit more involved after that. So basically what we're doing is this is an introduction to advanced Fibonacci time and price analysis. Now, let's see if I can get used to this because I'm used to using Zoom every single day, and today GoToMeeting is just slightly different. All right. All right, so let's get started. So why would you want to use this type of Fibonacci analysis? Well, first because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets for the trade setups. As far as this work is concerned, it works on any time frame and essentially on any good market data. So for example, you're not really going to be able to use it on something like penny stocks or something with some very, lousy intraday data or something like that. But most of the main charts that everybody does trade, you can use this analysis. I've applied this method to stocks, ETFs, futures, and the Forex markets, and actually I should probably add Bitcoin because I've been following that for about the last year. It's an excellent methodology to use with option strategies. That's who I started with, and there are definitely some good strategies that you can use along with this work if you don't want to trade outright futures or outright stocks. And also, you can see things in the market that you will never see using indicators alone. Now, as far as the basic Fibonacci numbers, most of you are probably familiar with these. This is the number series, and the way that you come up with the next number in the series is that you add the prior two numbers. So, for example, 55 plus 89 is going to give you 144. Then for the next number after this, you'd add 144 to 233. That'll give you the next number. And that's the Fibonacci number series, okay? And it will continue to infinity by adding the previous two numbers. But what we're not doing is we're not using the actual numbers in the number series to do this work. We're actually going to use the ratios derived from this series. So as far as the ratios that we're using, 382, 50%, 618, 786, 100%, 1272, and 1618. Now, for some confirming ratios, if I have a very large swing, I may also use 236. I actually use 2618 as a third target for any of my trade setups. And not very often, but every once in a while, you have a real runaway move, you can run an extension at 4236 to look for possible resistance, okay? But otherwise, these are the ones that I use every single day. We typically come up with about, there's probably anywhere from 10 to 20 trade setups every single day in the trading room and in the end of day update. So 618 actually comes from in between the number series. Actually, let's go back to that. So for example, if you multiply 13 times 1618, you're going to come up with the next number. So basically, the golden ratio is inside of these numbers. So that's where the 618 comes from. But as far as the other ratios, okay, what do they have to do with anything? Well, they are all mathematically related. So for example, for some of the other ratios, the 1 minus the 0.618 is going to give you the 382 that you see all the time. Square root of 618, for example, is going to be 786. Just goof around with that on your, what do you call those things? Calculators. 1618 is the expansion of 618. Square root of 1618 is 1272. This one is always important because this is always target number 1 for any of my trend trade setups. And then also, for example, 618 minus 382 is going to give you a 236, which is actually the smallest ratio that I would use for anything. Now we're going to go over the 3 types of price relationships that I run, and I'm going to go through some of the examples. And after we're done with that, that's when the more important or more exciting stuff comes into play. So as far as Fibonacci price retracements, basically we're just running any prior low to high swing and running these retracements back to that last low for potential support, or any high to low swing running the same ratios for potential resistance. And I'm always using 382, 50%, 618, and 786. Okay, just an example of a retracement. This is the stock square, and here we measured a prior low to high swing, ran the retracements, and then you watch these retracements for possible reversals. Now you're not going to get a turn at every single retracement, but you do want to watch each one. And there's also a better way to work with this, because single levels, to me, that's not really a trade setup. Okay, there's an exception there that we'll get into, but the single levels, that's not really what I'm looking for. I'm mostly looking for the confluence of price relationships. So in this case, you can see that you didn't really see any reversal at the 382 or the 50%, but you do notice that right around that 618 retracement, we did end up putting in a low and did see a nice rally from that area. Okay, but this is, again, the simple stuff. We'll get into the more advanced as we move forward. Okay, here's another example of a retracement. This is actually a 30-minute chart of AMAT. Here I measured a high to a low, ran the retracements, nothing here. You did actually have a reaction off of the 382 retracement in this case. Not really much at the 50%, but you did have a more important turn or change in trend once you got up to that 618 retracement at the 5840 area. And actually in this case, I think that was the actual hit. So 5840 was the high, and notice that you did see a nice healthy reversal after that. Okay, so that's it for those examples. The next type of price relationship that I use in this work is what I call a Fibonacci price extension. And that's essentially a retracement beyond 100% of a prior swing, okay? So, for example, we're going to look at prior low to high swings. We're going to run the extensions and look for possible support. So we're going to run a 1272 extension and then a 1618 extension and look for possible support around that. Or you take a prior high to low and extend upwards using the ratios of 1272 and 1618 for possible resistance, okay? And again, those are just going to give you single levels, but it's when you get the confluence that you really start to see some really good solid trade setups. Okay, so here's an example of extensions, and actually there's 2 examples on this first chart. This is an old chart of Facebook. Now here I measured a prior high to low swing and ran the extensions. And you'll notice that, just short of this extension, you had a pretty healthy reaction. And actually on the retest of it, you had another reaction off of the 1272 extension. We didn't see any change against the 1618 extension, but again, we're always going to watch them and anticipate a possible reversal, but you're not always going to get it. Now the second extension on this chart was from this prior high to low swing. This is, again, a daily chart. And let's see, in this case, the 1272 extension really didn't give you anything. But once we hit the 1618 and we knew to watch for possible resistance here, you saw another healthy pullback after that. So bottom line, anytime you reach extensions of prior swings, if you are in a position, that's when I'm always suggesting that you ratchet up your stops. And that would be in this case. If it was the other way around, you would ratchet down your stops. All right, let's take a look at another example of an extension. This is a daily chart of Intel. So looking at an extension of a prior high to low swing, this high to this low, ran the extensions. We didn't really see any reversal at the 1272 extension, but we did end up seeing one at the 1618. So the 1618 extension came in at 5085, and the actual high in this case was made at 5085, and you did see a drop of $5.80 from that extension. So anytime you run into that resistance, it's a good time to trail up your stops. All right, here's another example of an extension. This is, a pretty old chart, but, it works the same on all the charts. Now, as far as CMG, again, this was way back when, but here is a prior low to high swing. Market was a mess. It just kept going down. So I wanted to run the extensions to see where we might terminate the move. Now, we didn't really see anything at the area of the 1272 extension, but the 1618 came in at 262.71. Wasn't a perfect hit, but it was close enough. 263 ended up being the actual low. And even though this doesn't look like much of anything, that was a rally of $82.88 off of that extension swing. Okay, so that's an extension. And then the third type of price relationships that I look at, I like to call them Fibonacci price projections. Now, the problem with this is that some of the other software vendors call them extensions. It doesn't matter what they call them. All that matters is that if you are going to run this type of support or resistance, that you use a tool that allows you to choose 3 points on the chart. So what I'm doing here is we're comparing swings in the same direction. You can measure a low to a high and then project from another low for possible resistance. Or you can project a high to a low and then project from another high for possible support. Now, we always use 100%, and that's also where symmetry comes in. I'll explain that a little bit later. And then sometimes 1618. I won't use that quite as often, but there are times when it goes beyond the 100%, and it's worth checking out the 1618 projection also for support or resistance. Okay, so here's an example in crude oil. As far as crude oil is concerned, this was a daily chart, and this is an example of a projection of a prior swing. Okay, here, prior high to low swing was $3.12. Okay, you can see that here with the label at the lower end of the chart. And then I took that and projected 100% of that from the next high to look for possible support. Now, this wasn't a perfect hit, but it was within a penny, okay, because the projection came in at 55.87 and the actual low was made at 55.88. So this was a decline of $3.12. This was a decline of $3.11. Okay, close enough. It hit, it held. You ended up seeing a beautiful rally from that support. Well, for whoever is having issues with audio, the recording should come out fine, so I will post that as soon as it's rendered. All right, so that's an example of a projection that's just using the 100% ratio. Okay, this next example, this is a 60-minute chart in Google. Now, in this case, I ran both the 100% projection and then also the 1618 because we went beyond the 100%. You didn't really stall or stop here. So the next decision came in at the 1618 projection of this first swing up, which gave us the 1097.88 area. Actual high was made at 1097.51. Okay, definitely close enough. So you want to watch these areas for key support and resistance decisions. All right, here's another example of running a projection. Again, we're comparing swings in the same direction. This is a 30-minute chart in S&P. Here, I measured a prior low to high swing. This ended up being 91 points in the S&P. And then anytime, we started bouncing, I would have run this projection from that new low, but here we didn't quite get up into that area. But when we made this low and started to rally, projected this 91 points from this low, that gave us 30.97 as the resistance decision. And notice that these swings were very similar. They weren't perfectly equal, but this was 91 points versus 90.25 points. Okay, so the actual high was made at 30.96 1/4, and you ended up having a healthy decline of 243 S&P points from a simple symmetry projection. Okay, so those are the price relationships that I use. I use retracements, extensions, and price projections. But then a very powerful trade setup that I use every single day is called a Fibonacci price cluster. So the definition of a Fibonacci price cluster is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. Okay, so we're going to go over an example of one. This is also an old chart of Facebook, since now we're looking at Meta instead. Now in this case, what we had was, I started looking for support when the market started pulling back. So I ran a retracement of a prior low to high swing. We ended up having the 786 retracement come in at 334.31. Okay, so that was one level for possible support. Okay, but I like it better when we have a confluence. So we also ended up seeing a projection on the same chart of a prior swing that was similar to this decline that we were seeing. That was 24.29. This was 24.75. Projected from this high, gave us 334.05. Okay, so we had 100% projection and a 786 retracement so far. Now on the same chart, we also had a prior low to high swing, and we ran an extension. We ended up having a 1618 extension at 332.72. So if you put those all together, you have a cluster. Okay, you have the minimum of 3 price relationships that come together within a relatively tight range that identifies key support or resistance. In this case, it was support that came in between 332.72 to 334.31. It included a 786 retracement, a 100% projection, and a 1618 extension. Okay, that gave us the zone. We ended up hitting within the zone. The actual low was made at 334.50. Okay, actually this was slightly above it, but this is definitely close enough to look at it for a trigger. And again, we had the 3 price relationships. It hit, it held, it triggered an entry, and it met 2 targets on the upside. So this ended up being a rally from this high to low of $43.05. Okay, so what are you supposed to do with this? Well, what we like to use is what I call a trigger. A trigger is essentially the price action that tells you that it's worth placing a trade against either a key support or resistance decision. In this case, for swing trade entries, I always suggest that you use a 15-minute or a 30-minute chart for a swing trade entry, for something that you can keep overnight. So remember that we hit the support against this area. And what I want to see for a trigger is I want to see a moving average crossover, and I like to use the 834 EMA crossover. You can use other ones if you test them and make sure they work fine. And then I also want to see a pattern shift. And what I mean by that is you're going from a pattern of lower lows and lower highs over on the left-hand side of the chart. I want to see something that tells us that we're shifting gears by taking out a prior swing high. So here, once we took out this prior swing high and also had the 834 EMA crossover, that was your buy entry. So it was probably right around the 338 area. And then your initial risk would have been either underneath this low or underneath the low end of the cluster. Either one of those is fine. And I do have a trading plan that I've given out, so if anybody's interested in that, you're welcome to it. All right, let's see. All right, here are some other examples of price clusters. Now, this was off a weekly chart in Apple. And what we found, we had 3 price relationships. I had one of the prior declines on this weekly chart was 28.81, so I projected that from this high. I also had a 786 retracement of this low to this high that came in just below that. And then also a 1618 extension of this low to this high. That came in on the low end at 114.82. So we had a price cluster at 114.82 to 116.28. It hit, it held, it triggered. You know, it didn't go anywhere right away. I mean, we had an initial rally and then it basically tried to retest this support. But we did eventually see a rally up to the 1272 extension. So we met the minimum upside target for a rally of $38.77. Okay, so again, that's a cluster. And what you want to do is you want to go always to the lower time frame chart for a trigger, because you want it triggering as close as possible to where your definition of risk is. Okay, this next example is in XLF. Okay, now there's a concept I use, I mean symmetry. Symmetry is similarity or equality when comparing swings in the same direction. You could just use symmetry by itself to trade and you should be able to make money, especially if you're doing it in the direction of the trend. Now in this case, I'm showing you the symmetry between these swings. This first rally swing was 449. This one was similar at 457, and this one was similar at $4.52. That was part of where the resistance came from. You know, I took 100% of these two swings, projected that from this low, and then also had a retracement of one of these prior swings that was a 786. So you had two 100% projections and a 786 retracement. The zone was 39.98 to 40.12. Actual high was made at 40.01, which was directly within that zone. And as of the time that I took this snapshot, I mean, not a huge decline, but you know, $3.88 from this resistance. Okay, so again, just examples of what I'm doing every single day. Whoops, let's go back to that. We had another one in Facebook. This was on the sell side. This is also on the daily chart. Now here, there was a symmetry projection of a prior low to high projected from this low. Okay, you can see where that comes in. There was also a retracement of a prior high to low. I believe it was the 382 retracement of that prior swing. And then there was also a minor extension of this high to this low. And that came into at 236.65. So we actually had, well, the low end of this zone came in at 236.65. The high end came in at 240.13. We had a 382 retracement, a 100% projection, and a 1618 extension. It held that resistance, rolled over, would have triggered on the lower time frame charts, and you saw a decline of $53.59. Now the target was the 1272. Honestly, I don't know if it met that target at that point, but that's just another example of a cluster. But the other thing that you should know is that the symmetry by itself, even if you just had the one symmetry projection, this would have been considered a trade setup. Okay, if we had hit that zone and it had triggered for you. Okay, now this is definitely an old example, but again, you know, it's all the same. You know, it works the same as it did, you know, 20 years ago. This is actually Ethereum, and this was what I would consider a two-step pattern. Okay, now the two-step pattern for me is going to be different than ones for other people. The one that I use has symmetry within the zigzag. Okay, so it's basically a zigzag pattern like this, but that the first swing needs to be similar or equal to the second swing within that zigzag. And then also you need two other price relationships that will overlap. You will need a retracement of a prior swing to overlap that projection, and then also an extension of the middle part of this zigzag, so this low to this high, extended downwards. Okay, now as long as you have those three price relationships, it's a two-step pattern. But then there was also, in this case, an extra price relationship that just happened to overlap the other levels. So we had four price relationships within a zigzag pattern: a 1272 extension, a 100% projection, a 618 retracement, and a 1618 extension. came in at 2600 to 2656. Looks like 2651 was the actual low. It hit, it held, and it met just about two targets. It looks like it was just a teeny bit short of target number 2. Okay, and anyone who's been looking at Ethereum, you know this is an old chart because it doesn't look anything like that anymore. But it is a good example of a two-step pattern that had the right price relationships and also met the minimum upside target. Okay, I have another example that includes symmetry. And again, symmetry is similarity or equality when comparing swings in the same direction. This was in UPST. Here we had a prior high to low swing that was $84.81. I projected 100% of that from that next high. Okay, they definitely looked similar. It wasn't perfect equality, but very similar, 84.81 versus this decline of 84.63. So this by itself, you could have just used that symmetry projection for a trade setup. Okay, but I do like when there are other price relationships that overlap. There was also a 786 retracement of one of these prior swings. I believe it was this one. And then underneath that, there was a 618, I believe, of the larger swing. But bottom line, we had support here, mostly at 104.61 to 107.08. Actual low was made at 107.26. Again, not perfect. You know, you want to give it a little bit of room, you know, 20 cents, 30 cents, whatever, depends. And it hit, it held, it triggered, and meeting the minimum upside target gave you a rally of $112.85 off of what? Simple symmetry, basically 3 clicks of the mouse. Click, click, and click gave you this. Very simple. Okay, now this is a more recent example. I think I put it on Twitter as a teaser. This was in AMD. Now, obviously, the ones in the direction of the trend are typically better setups, but there are times where I will look at counter trend setups, but it has to have you know, specific things come together. But in AMD, if you looked at the larger pattern, it was you know, a general pattern of lower lows and lower highs. I found that the prior rally swing here was very similar to the rally swing here. We also had a 618 retracement of a prior high to low swing. And then we also had a 1618 extension of this high to this low. Okay, so the zone 109.40 to 84 area, which included symmetry, a 1618 extension, and a 618 retracement. There were some lower levels that came in lower, but once they cleared it, this is all we had left. So it held the zone, it triggered on the lower time frame chart on the short side, and as of the time that I took the snapshot, you had a decline of $28.93. Now typically the target's going to be here, but we don't always meet our target, so typically if you get involved in a trade, don't assume that you're going to get that target. Just trail stops down as you go, just in case we don't meet the target. Okay, here's another example. This is actually another two-step pattern in Tesla. So there's actually 3 setups that I run every single day. I run the Fibonacci price clusters, the 3 price relationships that come together within a relatively tight range. I also run the two-step pattern setups, and I also run symmetry setups. Okay, so those are the 3. That's all I look for every single day. But here's another two-step pattern where you're correcting with a zigzag pattern. You're correcting a prior swing. So we had 100% of the first swing up. Looks like that came in 960.73. We had a high to low of that middle portion of the zigzag with a 1272 extension. And then we also had a retracement of this prior high to low. So we had a 50% retracement, a 1272 extension, and a 100% projection. It came in at 956.96 to 960.73. We actually fell just a little bit short of it. 955.50 was the actual high. But guess what? That's close enough to look for a sell trigger and define your risk above here. and we saw a decline of $158.16 in Tesla from this resistance. Okay, I've got another example of symmetry. So remember, symmetry is similarity or equality when comparing swings in the same direction. And when I have symmetry included in my cluster setups, they're typically stronger setups because of the symmetry. But again, similarity or equality when comparing swings. So this one was, let's see. This one was similar to this one and was similar to this one. And basically what I did here was I took this prior high to low, projected it from this high, took this high to low, projected it from this high. It gave us support here at this 97.68 to 78 area. Actual low was 97.73. Beautiful rally followed. That was in the dollar index. Okay, I have another recent example. This was one of the ones I had put on Amazon. This was after everybody was excited that Amazon was going to split, and they thought that that would be bullish, but we had slammed into a resistance cluster at 129.05 to 131.30. It included 3 100% projections. Those are the red lines. I color code them. A 1618 extension of a prior swing. Actually, I think it was this minor swing here. And a 50% retracement of one of these prior swings. Okay. Actual high was made at 128.99. Again, not a perfect hit, but close enough. Okay. It hit just short of it. And it triggered on a lower time frame chart. Now, it's not like the old days when Amazon was, what, 20 times bigger? But you did see a decline off of that resistance of $27.56. Okay, so another cluster decision. Another one that I did post on Twitter was the diamonds. Now, I think we had a lower area where you started to clear some of the stuff there, but we ended up holding the cluster at 333.03 to 334.24. Mostly symmetry. I can also see a 786 and a 1272 in there. I know it's difficult to see because it's clustering together so well. That's why I have to write in the letters, because you can't read these levels. So again, a 1272, 3 100% projections, and a 786 retracement. And we saw a decline of 36.56 in the Dow Diamonds off of that resistance. Oh, okay. This is one that I thought I had posted, but I actually didn't. I had just put it out on the video update. But here's a glimpse into some time factors. Okay, and this is what I call time symmetry. Okay, many swings tend to be similar to others in time also. So notice that this prior low to high swing, that was 7 trading days from that low to high. This one was also 7 trading days from that low to high. Then from this low to this high, it was also 7 trading days. So this is potential time resistance to a move. Since last time when you rallied 7 days, you rolled over. You rallied 7 days, you rolled over. Now, do we know that this was going to roll over for sure? No, but we knew it was a decision. And not only did we have the time symmetry with these days being equal to each other, there was also price symmetry with another swing. This was $31.61. This was $31.25. So again, not exactly equal, but very similar. So this was time and price resistance, and this gave us a decline of $36.18. But these are the types of things that I look at every single day to identify key, mostly price decisions, but when time comes together with it, then it's really awesome. We are actually doing intraday timing on the indexes, mostly on a 120-minute chart, sometimes a 30-minute chart. Sometimes I even go down to a 10-minute chart. But when you see the price and time come together on the intraday charts, then you have some very low-risk setups. Okay, this next example, again, another cluster. This is where I'm looking at a confluence of at least 3 price relationships. We had a 618 retracement of that swing. We had a 786 retracement of this swing, and we had a 1618 extension of this high to low. Came in at 152.64 to 153.51. Okay, the actual high was 152.68, directly within that zone. It finally triggered. Probably would have scared you here because it was coming back towards that area, but we ended up seeing a decline of 24.67 from this price cluster zone. That's on a daily chart in NASDAQ. Okay, and now we're actually going to look into Fibonacci timing. So for the timing, I use the exact same ratios that I use on the price axis of the market on the time axis of the market. Now normally when somebody tells you that they are timing the market, they're timing it via the price work. It makes better sense to time it via the time axis of the market. So again, for Fibonacci timing, we use the same ratios that we use on the price axis and apply it to the time axis. So for example, we will measure the time between a prior high to high swing and then multiply that time by the ratios and project the results in the future when we see time clusters, which would be 3 or more time relationships. We always look for a possible change in trend. Okay, and we just had that occur recently. Also, when time and price come together, you have a much higher probability trade setup. Okay, so let's just look at a couple of examples. We're actually going back to that first cluster I showed you in Facebook. Okay, so we had the price support here, and it held. But at the same time that we tested support, we also had timing factors. One was this high to high. 618 in time came in on July 19th. We had a low to high. 100% in time came in on July 20th. We had another low to low swing. 1618 in time came in July 19th. And then we also had another low to low swing. 786 in time came in on July 21st. Okay, so we had 4 cycles between the 19th through the 21st as we were trading straight down into support, and we made the low directly within that time window. So July 20th was the low into this key price support decision. So when time and price come together, it's a much healthier or higher probability setup. Okay, so that's something to remember. Here's another example of timing factors, and I always do the S&P and the NASDAQ. And here, for example, we had, let's see, this was a high to high. 1272 came in March 30th. We had another high to high. 1618 of that came in March 31st. We had a major high to high over here. 1618 came in on March 29th. We had a high to low. 1618 came in on the 30th, and then we had another low to low, and that came in on March 28th. So we had timing the 28th through the 31st. Now the way that you look at timing when you do these outright cycles is whatever the market's doing into the time window, you look for a reversal of it. So if we're trading straight up into these timing factors, you anticipate a possible reversal back down. So we ended up trading straight up into it. We made the actual high on the 29th, which was directly within that window. And this is the decline that followed. Okay, so timing is definitely worth knowing about. This is an example of, I was taught by Robert Miner, who has the Dynamic Trader software. And he has this extra little program inside of it that will automatically run timing for me if I show it which swings to use. So this is your recent example. Okay, this was in NASDAQ cash. Now when I ran the report, it showed standout timing here. Okay, the highest scoring dates. This is where it came in. This was June 15th, June 16th, okay? Highest scoring dates. So you know that we're going to look for a possible reversal into those dates. And then this next chart, it's probably my last chart. This is what we saw. So remember, we had the 15th, 16th. Here's the histogram. Actual low was made on the 16th, right here. We also had timing. Now, it's absolutely a counter trend trade, and you definitely want to be prepared for a possible failure because we're still looking at a bearish pattern of lower lows and lower highs on the daily charts. Okay, but could you have made money off of that? Absolutely, especially if you knew about it in advance. So that, I think, is my last slide here today. And now I'll take some questions if you have any questions. First of all, if you're interested in watching this, you want to go to, I'll give you the website. Okay, so the trading room that I'm in every single day, that's ElliottWaveTrader.net. You can have 2 weeks free without even giving them a credit card. Okay, so if you want to watch it, if this is interesting to you, then that's what you should do. But as far as, well, first of all, don't expect to get the timing right away. It takes a while, but there's a whole chapter in my book on it. And let's see. No, 1272 and 1618 are good ratios for, where moves tend to terminate. So actually, let me just get rid of this, and then I'll show you a couple of the other charts. So as far as S&P is concerned, okay, so initially we came off of this resistance, this 3805. But this is still in a downtrend, okay? It's still a pattern of lower lows and lower highs. You are below the 200 simple, you're below the 50 simple, and the 513 EMA combo I use is still in a sell mode. So yes, we have a counter trend low in place, but can you still fail on the way up? Absolutely. You have to watch for that because there's still plenty of resistance and it's still a downtrend. I mean, great. If it goes through this area, we're probably going to go to this one next. You just have to take this from one decision to the next. We had a counter trend buy decision here on the daily chart. And now, since we're running into resistance, it's time to ratchet up stops. Maybe we'll push through it. Okay? But this was your last setup. You don't use 100% on the retracement. No, I don't. I only use either 236, 382, 50%, 618, 786. Those are the retracements. Okay, question is, how do you gather the tops and bottoms? I just look at obvious swing highs and lows. For example, on this chart, I'd look for, maybe this prior high to high swing, this high to high swing, this low to low swing. Could probably also run this high to high. Some of them you run, like if you run it back here, we'll go beyond the ratios. So it takes a while to get used to how you do it, but you can actually do this on Thinkorswim. It does have the cycles there. What tickers do I currently? Okay, I do S&P and NASDAQ futures. I do IWM. I do, let's see, Apple, Amazon, Google, Nvidia, Tesla, gold, crude oil. I will take a peek at TLT, Bitcoin, sometimes Ethereum, Microsoft, diamonds, and a few others. We do end up doing twice a week, we do requests. And actually Tammy is working with me now, so she runs the morning session. I run the afternoon session. Also silver I'll look at every once in a while, and then some of the current ones I'm looking at. Now this is definitely counter trend, but in Meta, we have a cluster but it is a counter trend buy. Comes in at 152.03 to 154.28. All right, let's see what else I missed as far as questions. I'm probably going to put the replay on. It's possible that you'll get one emailed to you, but I am also recording this on Camtasia, and I plan on posting that on my YouTube channel. So my YouTube channel is just underneath my name. And let's see. There's going to be a training available. I'm going to be doing classes that there's going to be like 14 PowerPoints that I've recorded. But I hate to say it, but that's not going to be available until September. That's the launch for, what I'll be doing as far as the education is concerned. Because there's two different things. People either want to use my work to trade. Those are the ones that are in the trading room at Elliott Wave Trader. And then there are people that want to learn how to do it themselves. And that's what those classes will be for. But again, the launch on that was delayed until September. When you're looking at a chart, all you have to do is run all possible retracements, extensions, and projections. But as far as, picking the highs and lows, that definitely takes some experience. So you can go ahead and look at something that I've posted on Twitter, for example, and go see if you can replicate it. And if you come up with the same levels, then you know that you're doing it well. Okay, so can we use you can use, well, I don't know about a channel, but if I'm going to run resistance, basically what I'm doing is, well, let me get the right chart here. This is what I've already done. I've taken all of these prior swings and swings inside the swings, and we're running them. As far as a channel, no, I'm not using the channel, I'm using symmetry. And obviously it's going to be different. The levels will be different for S&P cash versus S&P futures, but I do both of those. I probably only project out about a month forward in time. I'm usually trying to look for anything that's relatively close. And we are relatively close right now to timing for a possible failure to the downside. 22nd through the 24th. We don't know what projection you're going to have. I mean, I'm not going to tell you where it's going to go tomorrow. I'm going to give you setups where, for example, when this first hit this resistance, you had a decline in the S&P off of this resistance of 70 and a half S&P points. Now, if this low is more important, we're probably at least going to go to the 1272 extension target. Okay, the way you make money is with the setup. So, for example, this being a setup, let's see if I can find a trigger chart here. And let's look at a shorter time frame chart. Okay, that level was around 37.31. Okay, so I should be able to use because we'll usually go down to something like a 1 minute chart, or some people will even use the 377 tick chart. Well, I guess I'll just stick with a 5 minute chart in this case. Okay, so you see where we ended up holding that area of support. And then here was your trigger on a 5 minute chart. It would have been a lot quicker if you used a 1 minute chart. So the way you make money with this work is setup plus trigger equals trade entry. So for example, that would have been a setup at 37.31 to 36. The trigger would have been moving average crossover and taking out a prior swing high on 1 minute chart or even a 377 tick chart, and then your risk is either under the low or under the zone. And then you shoot for the target. We don't always meet the targets, but you shoot for the targets and you trail stops up as you go. I apply them to highs and lows. I do not use closing prices. Okay, what's the cost of training? Do you need to buy software? Well, you don't have to buy the software that I use. I mean, I use Dynamic Trader, but that'll cost you at least $1,000, and it costs me about $900 a month in data feed. But there you can use Thinkorswim, you can use TradingView, and there's another program that I'm involved with that will be coming out in the future. And as far as, the trading room, I'll give you an idea. I'll just pull this over for a minute. You won't see all the charts because I have it on a big screen, but this is what you'll see as the market's trading. So for example, this is when we pulled back into this support. Actually, I have to take off the bottom of that label there. But here is the 31 to 36 area in the S&P on the 120-minute chart. So you watch it, test the support, you go down to your trigger chart, and you look for possible change. Also, we had Bitcoin. I had timing for low with the histogram here, but it's still in a downtrend, so still have to be very careful in Bitcoin also. I had decisions in, this was actually crude oil. This is what I have up for the evening charts. During the day, I have, let's see, Tesla. Okay, so we had a buy setup in Tesla. We had a buy setup in Apple today. And then we have, let's see, underneath here I have Amazon. So we had time and price for low in Amazon today. And we also had a buy decision with timing in NVIDIA. And then the other charts on the right-hand side, they're actually going to be the 10-minute charts. Not sure if I can do this where I can show it to you though. But yeah, the shorter term frame charts are way over on the right-hand side. So I have 8 charts up that you watch, and then I post all the other charts during the day. But again, it doesn't cost you a dime to do a trial for 2 weeks. You know what? I don't have a chart on the ARC, so I cannot give you an opinion. I can't give you an opinion on that because I don't have a chart. I have to do it via my work. Like I said, we do requests, but that's only going to be Mondays and Wednesdays. For anything else that I don't do, I do have a diamond chart, but it's not the main set of charts that I run every day. I'm only going to actually post something there if I find something special, but I don't have one up every single day. It's mostly NASDAQ and S&P. I give you the buy and sell decisions. I do not give you the triggers. I don't have time to give you the triggers. Basically, there are some people that are using tick charts for entries. There are other people that are using 1 minute charts for entries. There are others that are using the zones for swing trades only, which is why you would need a higher time frame trigger for that. But I give you the setups and you take the trades with the information that I give you. The trial is 2 weeks. The training, that's going to be something else in September. And that, my guess is it'll be maybe just under $200 a month. I'm not sure though. But again, you want to learn it and do it yourself, or do you want to just trade off of the work that I already do? That's the question you have to ask yourself. You'll have to write to the guys at Elliott Wave Trader. You can try it, but if it doesn't work, you can write them and say that I allowed you another one. Yes, when I'm ready, then I will post it on Twitter. I mean, I've already done the classes. I mean, they're all, you know, the videos are done. The trading room should be, I don't know if it's 149 or 150 a month. But if you can't make you know, that much in the month, then you probably shouldn't be using the work. And let's see. And now, if I missed any of your questions, because there's some of them that flew by, you can ask me now. But then we will wrap it up. But let's see if I have a few. Like, for example, we have a sell setup in IWM, but it doesn't come in until 171.36 to 172.30. In S&P, we had key price support and timing, but we have to watch the resistance on the way up because it's still a downtrend. Let's see some of the other stuff we had. Amazon, we're running into time and price resistance. So we're going to watch that area for a possible failure. Same thing in Google. In Tesla, we had a possible double bottom against weekly support, but it actually doesn't confirm unless you take out the middle high. But this is a potential double bottom. That's in Tesla against support. We also had a sell decision in Tesla, but now the next decision will be whether or not support holds after coming off of this resistance for, let's see, $54.59. I don't have BKNG. Again, you can sign up for the trial, and the next day would be, I'm actually not working tomorrow because I have to fly to Chicago for a memorial, but Monday I'll be working, but Tammy will be working tomorrow. Yeah, Apple is still in a downtrend, lower lows and lower highs. You're below the 200, you're below the 50, 5 and 13 are in a sell mode, and you have resistance just above current levels. And you have timing for a possible high, the 22nd through the 24th. So if you're long Apple, you want to trail up your stops, and you definitely want to watch that resistance. No, I'm not at Simpler Options. I retired from there, but I'm on ElliottWaveTrader.net, and in the future the education will be on IM Academy. Yeah, so you want to go to ElliottWaveTrader.net. Let me just I'm going to give you this website again. As far as percentage, I guess it really depends on whether you do the trend trade setups or if you include counter trend stuff and what kind of triggers you use. But I do know that I have a lot of happy subscribers, and you can actually ask them and you'll get a better idea. Oh, okay. Yep, I'm actually gonna stop the video and then I can produce it. I'll put it up on YouTube as soon as it's done.